Welcome to Reshair on ESPN 730. For the next hour, your host, Chris Reshaar, will bring fresh air to your financial needs. Excite, educate, and empower you to make sound financial decisions. Chris is a seasoned licensed mortgage consultant with Movement Mortgage, equal housing lender, originator license number 117266. Now, here's your host, Chris Reshaar.
Good morning, Charlotte. Chris Reshaar here, back for another episode of Reshair Radio. Hopefully, you've listened to us in the past and you want to keep listening. I don't know, Sunday mornings, we're on Sunday mornings at 10 o'clock every single week. And let me tell you a little bit about what Reshair Radio is. If you haven't listened, you're just tuning in for the very first time. So I'm a local loan officer here in Charlotte, work for Movement Mortgage. Charlotte's probably the number one lender in Charlotte. But outside of me working for Movement Mortgage, the goal of Reshair Radio is to bring in local experts, guests from the community that can bring pertinent financial topics that you can benefit from in your day-to-day life so that you can look back someday and go, you know, I learned that little tip or that little strategy from Chris Reshaar on Reshair Radio. And if I can make your life better, can help you make a better financial decision, then I'm helping Charlotteans to have a better life, have a better financial life. And that's the goal here on Reshair Radio. So what I'd like to do is invite our expert contributor, Sandy Solomon. Sandy is an advisor with AXA Advisors, and he actually comes on the show on a regular basis, supports Reshair Radio, and I really believe in supporting Sandy in his business because I wouldn't be able to bring great topics like what we have today to you because I'm not an expert in all financial areas. Am I, Sandy? I'm not.
You're the next best thing, Chris.
That's right. So let's welcome Sandy Solomon to the show. Welcome, Sandy.
Good morning. Good morning.
All right,
I'd like to say hi to our listeners. Thank you.
He's a repeat offender. That's what I like to say.
Love being here.
So, Sandy, I know that I mentioned that you're a local financial professional with AXA Advisors. But before we sort of get into the meat of our theme for the day, which is really the basics of financial planning, why don't you give us some background and your experience and some of your credentials? Sandy's got more credentials than there are letters in the alphabet, really. I can't read them all, but why don't you give us some of the basics?
I'll do that quickly, Chris. Don't want to bore the listening audience too much with my background.
Please don't.
Yes.
I want them to listen again.
So for the last 22 years, Chris, of my life, I have devoted myself to work in the financial planning industry. And today I hold the following credentials. I'm a chartered financial consultant. That designation is awarded by the American College. I'm also a chartered life underwriter and a retirement income certified professional, all American College designations. And I've been with AXA Advisors since the fall of 1996.
And he's got the suspenders to prove it. I can see them, folks. They're pretty cool. But those are some big credentials there. But
you've got to look the part, Chris, right?
You've got to look the part. That's right. But at the end of the day, we want local experts that have those credentials here on the show. So is there anything else that you want to share about sort of the basics of AXA and maybe what some of your philosophies are generally?
Well, I'd like to first start with a quick disclosure. This is required by our compliance department. So why don't we do that? It's very important for our listeners to be reminded that the purpose of our time together today is to educate and is not to provide specific tax or legal advice. Any examples are hypothetical and are not a guarantee of performance or an endorsement of any product. Listeners should always seek the advice of a financial professional, a tax advisor, or an attorney about their specific situations. And again, I represent AXA Advisors, LLC. We're located in New York, New York. We're a member of FINRA and the SIPC. And our telephone number, in case you need to contact us, is 212-314-4600.
Sandy, I didn't think I'd get that. Could you repeat that one more time?
I could, yes, from memory.
Okay, cool. So let's go back to my original question. So tell us just sort of basics of AXA and you and some of your basic philosophies and how you operate in helping people.
Absolutely, Chris. I think the topic for today's show could really be called just the fundamentals of financial planning. So maybe we could get started with some basic things. And I always like to start when we meet with a prospective client by talking about the obstacles that people faces. You know, what's stopping you from getting started? And in my experience, there are really two kinds of people in this world, at least when it comes to financial matters. There are people who have cultivated the habit of spending first, and then they desperately try to save what remains.
It's fun, Sandy.
Yes. Those are the lifestyle builders. Okay, so they spend first, then they desperately try to save what little may remain. And the other kind of people, and by the way, that first group is the majority. Honestly, it is.
Okay.
So
that means we're talking to all you out there that are listening in your car or at home. We're talking to you.
Yes, you're
the
who
majority.
you are.
You know who you are.
You know who you are. The second group, these are the people that have already planned to save something first, and then what they do is they regulate their spending accordingly. They've in essence made a savings commitment to themselves for their future selves. So here's what happens is savers often tell us, they say, Sandy, I really am surprised by how little I missed this money that we set aside. I really didn't even notice. And the spenders often say things like, wow, I don't have any idea where all the money went.
Right. And sometimes I will bring up personal examples on this show, and I've got a situation where I have a family member of mine who is at that point in their life where their ability to earn money is kind of gone, and they weren't savers, and they're really regretting, and even apologizing in some cases, saying I should have been better, I should have been a better steward of my money. And sometimes I've had to step in and help that family member. And I'm okay to do that. I've been blessed, very blessed. But I think that's very important that our listeners understand that, really just trying to set up here the fundamentals of a basic financial plan. And that the most critical part is that you do something, right? So what Sandy is sharing with you, if you're listening today, is really more about doing something, putting a plan in place at some point. It's never too late, but the earlier the better.
That's exactly right, Chris.
All right, well, let's keep going here.
Okay. So another obstacle that I see, and I think this is very common, is the fallacy of the perfect investment. So this is the idea, Chris, that somehow, somewhere, there exists this ideal or perfect investment. And it's one that's either going to outperform some benchmark or some hypothetical index, or it's somehow going to beat whatever's in your neighbor's portfolio because we're talking across the fence, right?
Yeah.
So that's a fallacy. The fallacy.
Keep up with the Joneses.
No, I have to do better.
Oh, I have to do better.
I have to do better than the Joneses because I need bragging rights. So in truth, I think there's a better approach to consider. We are looking for ideas that are suitable for our clients to invest in based on factors like their actual investment experience. How long have they been doing this? How long is their time horizon? Can they save this money for a long period of time in the future? Their ability to understand and tolerate pricing changes in the market, which we call volatility. Okay,
which
some people call it risk.
We've been seeing a lot of that lately.
Yes, and that's part of it. That's the nature of the markets. And then I always like to make sure that our clients have a suitable level of emergency savings already in place, and that they have pretty predictable cash flow, so that the things that they've committed to invest in, they don't have to start and stop. Is an important thing to note.
Yeah, and we hear about, that emergency cash flow that you just sort of mentioned there, Sandy. Just literally a lot of people don't have even a month's worth of rent and or mortgage saved in the bank for a rainy day, should they be out of work temporarily due to an injury, whatever it might be. So all those factors are very, very important as you sort of lay out a basic plan in setting up, future financial goals. So far we've talked a little bit about how to help someone evaluate their situation to determine what to recommend, or in other words, what would be like optimal.
Okay. I actually love the word optimal, and I'd like to explain to the listeners what that means to me, the word optimal. To me, optimal is a plan that is never going to be the worst thing that you could have done. and always has a chance to be either very good or best. No one actually knows. Anyone who says they do, they're not telling the truth. So optimizing is part of financial planning. It's not necessarily easy to do, and I think that's where the do-it-yourselfers could potentially get into trouble, is they don't really know how to optimize, and that's the role of a professional such as myself or some of my colleagues. Yeah.
Well, perfect. So, what I'd like to do is just kind of give you basics in terms of some of the things that I've done as I've started my life. I remember I was telling you this story, Sandy, back when I was in graduate school. My wife had gotten her first job, and I've had plenty of mistakes and falls along the way. But I remember that first time I thought, well, I need to start a basic plan, and I went into an advisory shop, no names mentioned, and met with an advisor. And here I am saying, I want to invest $200 a month, and the guy across the table was like, okay, well, let's just sign here. We'll put you in an account, and okay, good. And so then, like 6 months later, I was like, wow. I have this much money. Let's go in. I'm going to talk to that advisor and see what we can do to invest. And I went into that office again, and the guy was kind of like, I don't know if I have time for you. He didn't say that, but I felt very small, and they just didn't have the time. But what was most critical that I learned was that I put a plan into place. And even though it wasn't a lot of money, my wife and I bought our first home shortly thereafter, and we had a little bit of money towards our down payment. And I went to my advisor and said, we're going to use this money for the down payment. And then I saved $200 a month for several years, and then moved on and got out of graduate school. And then, life happened. And then I didn't take advantage of some of the retirement plans that were available to me in future companies. And it took me a while to sort of get back on that track. So I was on track in the very beginning, then I kind of got off track, and now I'm back on. But the bottom line is, no matter where you're at, you've got to do something to get a plan in place. And Sandy really is the catalyst to optimize wherever you are. So if you're a young millennial, you're just getting out of college, or you're looking at your retirement years in a few years and you don't think you're where you need to be, let Sandy be that person that can optimize that plan for you. So, well, we're going to take a quick break. Again, you're listening to Reshair Radio. If there's something that you've heard and you need a little extra counsel from Chris Reshatar on Reshair Radio, or Sandy, our expert contributor here with AXA, you can just give me a quick call at 704-277-4463. That's 704-277-4463. Stay tuned. We'll be right back.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with Movement Mortgage. Got to get my disclaimer in. I work for Movement Mortgage, license number 117266, and Movement Mortgage is an equal housing lender. If you're just tuning in, we're actually here live in the studio this morning with Sandy Solomon, AXA Advisor Planner, and we're talking a little bit about how to set up a basic financial plan. So if you don't have one, you need to keep listening. If you do, then congratulations, but you might still learn some basic tricks from us. Sandy, just before the break, I was telling you about a personal experience I had when I was very young, right out of college. And I had a financial advisor that was kind of helping me, but didn't really feel like I was getting the counsel. I didn't have an optimal plan, and maybe wasn't really being heard because I wasn't investing thousands of dollars. Tell me how maybe you would address that for someone that's listening to our show?
Well, I think one of the pillars of financial success is to find that person that can be your financial guide. You know, your Sherpa, if you want to put a tag to it, your financial Sherpa. And that person needs to be someone who is interested in you and is willing to take the time to help you cultivate the right habits. One of the things we love to do at my firm is talk with young people about how to get started and how to cultivate not only the right habits, but they always begin with the right behaviors. Getting started and starting where you are.
Perfect. Makes sense.
Yeah. So why don't we take a detour here and talk about the very, very first step. Right. When someone comes in to see us, we want to do what we call a client profile, which is a thorough fact-finding and understanding of exactly where you are in your financial life. And it's very easy to understand what we're looking for there. We want to know your income and your expenses. In other words, how much are you bringing in? How much is going out? Is there anything left over after that? We want to know your assets and liabilities. What do you already own and what do you already owe? Then we want to have a good conversation about what are your goals and objectives. So an example would be, do you have kids to educate? Do we need to save for college? What about retirement planning? Are we saving for a home or a special vacation home? What's the goal of the plan? And then, of course, we'll take the time to understand your risk tolerance and time horizon and investment experience so that if you're a novice investor, there are some things that are just clearly unsuitable for the novice investor, things that carry too much volatility, if that makes sense.
Well, that makes perfect sense. So what comes after that?
Well, this is where we'll start talking about the true pillars of financial success. These are the success concepts that I like to educate our clients about. And we've already mentioned the very first one, but it deserves to be mentioned time and time again because it is on an order of magnitude the most important thing. All the other variables pale in comparison to paying yourself first, Chris. Don't fail to participate.
You mean not pay my cable bill first, but actually put some money into savings?
Well,
or whatever vehicle it might be.
I would advocate for paying all your bills on time.
Right, of course.
But I would also advocate from the moment that you get your paycheck to sit down and to budget some funds to go to Chris's future life.
And
future
that is
financial
really
life.
Our listener. We're talking about our listener.
That's correct.
Perfect.
That's correct.
Okay.
So then the next thing is that you want to be properly allocated, and that's a technical term. I don't like technical terms. What that means is that you want to have in your portfolio the proper relationship between the asset classes that people invest in. And those asset classes are real estate, cash, stocks, bonds, and then maybe an alternative investment asset class of some kind. That's not a topic for today. So be properly allocated. And then, of course, and everyone's heard this one before, this is generally thought to be the cardinal rule of success in investing, is that you have to be properly diversified. And this has to do with avoiding the temptation to have too much ownership in any one particular thing, too much of
Absolutely.
one particular stock.
Yep.
Typically.
And I'm sure you've seen it, and I've seen it, where people have lost a lot of money because they overinvested in one particular, what was going to be the big payoff, and then lost in the end when everything was put into that one particular stock or an investment. I've seen it in my life. With you being a financial planner, I'm sure you've seen it a lot.
Yes, I have. And admittedly, anytime you venture into the world of investments, you're going to first admit that some of the things that you invest in aren't going to work out as well as you'd hoped. That is just, It's a necessary thing to understand. But those should be offset by things that do better than expected. And that's what diversification is all about. It's having a lot of names in your portfolio so that some things can have permission to not do so well. The things that do better than expected will make up the difference. That's correct. And that will reduce your overall risk It's no guarantee of success,
right?
But it's a method to manage the risk.
Yeah. All right, and the last bullet there is to review, rebalance, and recline. I like that terminology there.
Yes.
Recline.
Yes, that's one of my favorite sayings. So review means every once in a while we get together. We talk about where we've come from and how we're doing. Rebalancing is an interesting idea. I love the analogy. It's pruning the hedge and planting the clippings. In other words, we're going to sell off a little bit of the things that have overperformed and done better than expected and reinvest that money in things that have performed less well but are expected to rebound. So rebalancing your portfolio, and that's
just like
done
the tires
periodically.
on your car.
That's exactly right. Thank you. That's exactly right.
Perfect.
And then I like to say to my clients after that, just recline. Just relax. Don't worry about it. The big enemy here is fear, doubt, and worry. That's what causes people to make investment mistakes. And so what I say to people is recline. Don't worry about it too much.
Absolutely.
That's what you pay me for.
Absolutely. So you've sort of mentioned sort of taken this step, right? So what can you talk a little bit more about maybe some of the mistakes, et cetera, that you've seen?
Yeah. So the big mistake is the failure to get started in the first place. So my first recommendation is to take some small, manageable steps. And to me, that means to start right where you are. Don't make the mistake of thinking that you need a large amount of money to get started. Chris, we talked about your example earlier.
That's right.
Coming in, I remember, my very first investment was a considerably smaller sum than most people would have expected. It was well under $100 a month. That was a long time ago, Chris.
Okay.
Yeah.
You're dating yourself, man.
I am.
But that's good. I mean,
but
people
it worked.
want an advisor with wisdom.
That's right. It worked. So get started right where you are and don't make the mental error. Don't underestimate the impact of small investments made with great regularity over long periods of time.
Absolutely. Absolutely. That makes perfect sense.
So the next thing then would be to understand the basic concept of a term financial advisors throw around a lot, which is the term dollar cost averaging. You've probably heard that term before.
From you.
Yes,
several
probably
times.
so. Yeah, I use that term a lot. And it's overly technical, but it's axiomatic. What that means to me is that it's a law of the universe. It's axiomatic.
If you're lost with that word, I am too, but he's trying his best.
That's right. I'm trying to be a radio star, Chris,
That's
and
right.
so I used that language. So it's just truth that dollar cost averaging works as a long-term strategy because, Chris, it imposes the right discipline on investors. And what that means is that when you put a static amount of money into your portfolio every month, a round number, call it $100, whatever it is, when you do that and you do it with regularity, then along the way you're going to be buying fewer shares of your investment fund when prices are higher, and then you'll also be buying more shares when costs are lower with your fixed monthly investment amount. And that systematic monthly contribution, by simple virtue of the fact that you don't have to remember when you do it systematically, you set it up so that it happens automatically, it imposes dollar cost averaging discipline on you, and it is a very predictable way to succeed in the long run.
Cool.
So it's a solid starting point. I'm obliged to say that dollar cost averaging doesn't assure a profit and it doesn't protect against loss in a declining market. And to be effective, it has to be a continuous investment regardless of price fluctuations, okay? So investors should consider their financial ability to continue to make purchases through periods of low price levels.
Perfect. So here's one of my questions. What are some of the common mistakes you've seen individuals make in the past with their financial plan?
Okay, good. Well, we talked about one a little bit earlier, and that's the mistake of not having taken the time to seek out a financial advisor that will spend time with you.
Right. And that's what I experienced. Like I felt like I got the 5-minute conversation and I was pushed out the door.
Right. So I want our listeners to avoid that. Look for someone that has a reason to care about you. Maybe it's someone that's been referred or recommended. Maybe you have a neighbor you're friendly with that's someone you can talk to. But I would start out by finding an advisor that would spend time with you. And if you don't get the feeling that they are actively involved in listening to your concerns and actually caring for you, and the dialogue is somehow centered on how they can outperform or offer you something that's somehow superior to other people, then I would probably take another look.
Yep. It can't hurt to get a second opinion, not just when you're having surgery, but when you're also looking at your finances, get a second opinion. It cannot hurt. Sandy, was there anything else that you wanted to share with our guests here before we take our next break?
No, we'll pick up right there when we come back.
All right, perfect. Well, just before I take a quick break, let me remind you, we've got Sandy Solomon here with Axe Advisors. If you need any of his services, you don't have a plan, you need to get started, you need to do something, or you need to adjust your plan or manage your plan or rebalance your plan, let's give Sandy some consideration. Give me a call. I'll connect with Sandy at the beginning of the week, and we can maybe get that plan started for you as you can hopefully build some wealth in your financial world over time. So again, you're listening to Reshair Radio. My number to reach me is 704-277-4463. That's 704-277-4463. I can connect you with Sandy, like I said. We're going to take a quick break, and we'll be right back with another round of Reshair Radio.
Sports fans know that the key to winning the big game is going in prepared. Right now, houses are selling fast. So if you're in the market for a new home purchase, don't just be prepared, be Movement Mortgage prepared. Charlotte's leading mortgage lender, Chris Reshatar at Movement Mortgage, will tee you up with a free, fully underwritten upfront pre-approval. Shop for the home of your dreams, already backed by an upfront pre-approval at Movement Mortgage. Call Chris today at 704-277-4463 or find Chris at www.themortgagegenius.com. Go into the game prepared with Chris Reshatar of Movement Mortgage.
Hey, Chris Reshatar here from Reshair Radio with Movement Mortgage. Are you still sitting on a high interest rate mortgage loan? Are you thinking about consolidating, paying off some of those credit card debts, or maybe doing some home improvement? Now's the time to call because interest rates are still at a 40-year low. My number is 704-277-4463. That's 704-277-4463. I can also be found at themortgagegenius.com. Movement Mortgage is an equal housing lender and MLS license number 117266. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with Movement Mortgage. And each and every week, we bring in special guests and expert contributors to bring in awesome financial topics. And we've been in the studio here this morning with Sandy Solomon with Axe Advisors, and we're really talking about setting up a basic financial plan. Sandy, why don't you bring us back to kind of where we left off on maybe some of the pitfalls or things that we need to do to help people that may or may not have a financial plan in place?
Absolutely. So we were talking, Chris, about looking for the right financial advisor, the right financial professional to help you. So I would ask around to be introduced to an advisor who sees value in simple explanations of complicated concepts. Some financial professionals seem to subscribe to the idea of the overly complex strategy. Maybe it makes them seem to feel smarter.
Feel better.
Right. They use words like axiomatic.
That's right.
Yes.
I've never heard that word before.
So I value the ability to simplify things. So people won't do things for long that they don't understand, Chris. And so we don't have any uncommon knowledge, none of us. But I think there's an art to being able to explain what we do know in a way that other people can understand it.
Sure.
If that makes sense. So I would look for that advisor, and then I'd be aware of a couple things. I would first be aware of what I call the financial infotainment industry. So we've got a lot of information coming at us.
I felt inspired to do a real estate investment when I was up at 2:00 in the morning. Also, this great infomercial. No money down, and I could be a millionaire in about 6 weeks, I think. I don't remember, but it got me motivated.
Right. Well, listen, what I've learned is that information is not knowledge, and knowledge is not wisdom.
Wow,
Yeah.
That's great. I love that quote.
Yeah. So financial experts, sometimes they seem to be shouting, and I respect people who speak rather softly about what they know. They tell both sides of every story, and they avoid, I'll use another fancy word here, Chris, they avoid prognosticating, which means forecasting and timing the market. Okay? They're willing to admit that that's kind of a fool's errand, if you know what I mean.
Yep.
All right. So I've got one more quick anecdote. I think this would be a great place to end my part of the show today.
That sounds good. Go for it, man.
All right. A recent study conducted by Fidelity concluded with something rather unexpected. The study was centered around a group of client accounts that had outperformed all the others. And you know what they found out to be the common denominator of the outperforming accounts? The thing that these accounts had in common was that the owners of these outperforming accounts had actually forgotten all about them. They had forgotten that they had them. In other words, they had simply left them alone and didn't succumb to the temptation to overtrade or overmanage. And you know what happened? What happened was the market did the work like it always does, just as I'd expect. And these customers are typically pretty pleased with those results. So they participated. They didn't speculate or try to time the market. They reinvested their dividends. That's very important, and that should happen automatically. And for those participants in the study, that was a recipe for success.
So really, it's just invest and forget.
Recline.
Recline, whatever. So leave it alone, perhaps. Just be consistent. Do what you know.
I believe in a checkup periodically, but there's generally not a great reason to make changes unless if the original strategy was thoughtful in the first place, it shouldn't be changed until there's a change in the client's circumstances.
Makes sense. Makes perfect sense. So, Sandy, you do have the wisdom that we need on here, Reshair Radio. I'm so glad that you were here in the studio with us today. So, if you have any investment needs, you need any wise counsel, I would highly encourage you to give me a call, shoot me a text message, whatever it might be, and just say, I need Sandy. That's simple. You don't have that basic plan that we've been talking about throughout our show theme here this morning. You need a plan. You need to start somewhere. And I want to be a catalyst as a local radio guy that does mortgages. I care about my listeners. I care about my clients. And that's why we've got excellent resources like Sandy here in the studio supporting our show each and every week. So my number is 704-277-4463. That's 704-277-4463. So give me a shout. Say, I need Sandy. We're in good shape. So, Sandy, thanks for being on the show.
Thank you, Chris.
And I'm going to shift gears and move over to the world of mortgage. We'll see you next month on Reshair.
Thanks.
All right, folks. So hang in with me here. We're shifting gears, but we're not taking a break, actually. We're just going to roll right into our next topic. And what I'd like to do is I try not to spend too much time talking about loan products and programs because it can be minutia for our listener. Yet at the same time, the only way to educate you as our listener about these great programs and products that are available to help you buy a home is to actually bring them up and go through them and do that education process. So what I'd like to do today is I'm going to be highlighting some special programs for first-time buyers that really, gosh, if you're out there, just like if you don't have a financial plan, you need to give us a shout and we'll get you connected and get you set up with one. In the same case, if you don't own a home, you have a decent job, there's no reason why you shouldn't consider being a homeowner. What we do know is that the one thing that most Americans do to help them create wealth is that they buy a home. That typically is statistically your best source of creating wealth. People who own homes are more wealthy than people who rent. It's just math, right? So what I'd first like to do is I'm going to go over a program that is really kind of a limited time program only right now for folks that live in Mecklenburg County and Cabarrus County. North Carolina Housing Finance Agency is our state housing assistance authority that helps people throughout the whole state with special programs to help them become a homeowner. So the program that they have right now that's available just in our Mecklenburg and Cabarrus County areas, for those that live in this particular area, there are a few other counties outside of the Charlotte market, but those of you that listen to Reshair here in the Charlotte market, where there's a program that this state offers called the Home Advantage Program, $15,000 in down payment assistance. So basically, the bottom line is, unlike their typical program for a limited time only, if you're a first-time buyer buying in those 2 counties in our local market, you're potentially eligible to get $15,000 to help you buy a home, both for down payment and for closing costs, or a combination of both. So yes, you heard me correct. Yes, it's $15,000. And believe it or not, as long as you maintain that home as a primary residence where you live in it, occupy it for that first 5 years, the $15,000 that the state gives to you to help you buy that home is forgiven. It's actually forgiven 20% per year, so that in 5 years, if you stay there as a primary resident after 5 years, you don't have to pay any of the $15,000 back. However, because it's forgiven 20% per year, if you only live there for 3 years, then you would have to pay back 40%, in my example, of the $15,000. So again, 20% forgiven per year. But you got that money to help you buy a home. You can do it. You can use the conventional loan program. If you're a veteran and you're eligible for a VA loan, you can still take advantage of the $15,000 and do a VA loan. If you are in more rural parts of Cabarrus County or even some rural parts of Mecklenburg County, you can use the USDA loan, and you can also use it as on a conventional loan. So the loan product has, different flexible options between FHA, VA, USDA, or conventional. You can still take advantage of the $15,000. And like I mentioned, it's only in those 2 areas, county areas, that would apply for homes in those areas. It's going to, in terms of type of property, the property type has to be a single-family residence. It can be a condominium as long as it's approved by the loan type. And it can also be anywhere up to a 4-unit property or townhome. It will not fly on a double-wide home, at least at Movement Mortgage. Maybe the state allows it elsewhere, but I know that it is not allowed for that kind of financing. So you've got lots of options: single family, townhome, condo, duplex, whatever it might be. So that's important in terms of property type. Want to make sure you're educated on that. Let's talk a little bit about the income requirement. Now, most people don't understand with some of these specialty programs, if you're a first-time buyer, that the state, some of these specialty programs have income limits, meaning that you can't make more than a certain amount of income. And they'll also, in some cases, look at how much the household is making, meaning that if you're moving in with a fiance, if that fiance has a solid salary and you have a solid salary, then they're going to look at anybody that will occupy that home, look at that total household income, even if your fiance is not even eligible to be on a loan because they have really bad credit or they have no credit at all. It doesn't matter. It's going to be a household. In this case, for the Home Advantage $15,000 program, it is a household income program. So in this case, if you are a 2-person household, meaning 2 people will occupy the new home that you use the $15,000 as a down payment and closing costs, then you can't make more than $67,000 for our county area. If you have a household of 3 or more, maybe you're married and you have a child, or maybe you're a single parent and you have 2 children. If you are 3 or more, then that income limit is going to be $77,000. So as long as your household, no matter who's on the loan, doesn't exceed $67,000 for 2 or less, or $77,000 for 3 or more, then you would be potentially eligible for the $15,000 down payment assistance. There is a minimum credit score requirement of 640. That is a statewide minimum credit score. So you have to have a 640 middle credit score. There's a high, there's a low, and a middle. All lenders are going to take the middle score. And that's how it works. So you have to have a 640 credit score. And then, of course, there's what we call debt to income ratio requirements, meaning that your income has to be able to support the house payment and the debt that you carry, meaning car loans, student loans, credit cards, etc. There's a certain percentage that's allowable that can go towards the house and the other debt. That percent is 41%. I don't expect our listeners to follow what I'm talking about, but we actually do those analysis when you get pre-qualified with my team at Movement Mortgage. So if you are listening, you have a child that should have bought a home a long time ago, you are somebody that is a first-time buyer, meaning you haven't owned a home in the last 3 years, then you need to give me a shout, give me a call, shoot me a text message and say, Chris, I need the $15,000. Text message me at 704-277-4463. That's 704-277-4463. Just say, I need the $15,000, and I will give you a shout, call you back, send you a text, whatever it might be, and we can connect at the beginning of the week. You can do an online application at themortgagegenius.com. But boy, the money may only be available for a few more months. There's less than 1,000 reservations left. We need to take advantage of it if you're thinking about buying a home. We're going to take a quick break. I'll finish up the details on this $15,000 program. We'll highlight one additional program before the end of our show here on Reshair. So stay tuned. We'll be right back.
When choosing an insurance agency, you want a company you can trust. We are an independent insurance agency that can protect your personal assets, including your home, your business assets, as well as health and insurance needs. A true one-stop solution provider. We do not work for an insurance company. We work for you. As an independent insurance agency, our duty is to our clients' best interests. It is our responsibility to provide you the best service and the best coverage at the best possible price. You will have the added benefit of working with agents who understand your needs. After visiting our website, we will schedule an exploratory appointment to discuss your specific needs. Please visit our website at www.movementinsurance.com. That's www.movementinsurance.com.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshair. We were just on our third segment here, talking with Sandy Solomon with Axe Advisors on how to sort of build or start a financial plan. He's left out for the day, and I've been picking it up here and wrapping up the show here on my own, really highlighting some first-time buyer programs that I think are just phenomenal, that we're really trying to get the word out before the funds are no longer available. And before this break, I was highlighting the North Carolina Home Advantage Down Payment Assistance Program for buyers in the Cabarrus and Mecklenburg County areas. Real quick to recap it, it's $15,000, folks, $15,000 to help you buy a home. Like, I wish I had someone hand over $15,000 to me to help me buy my first home. That's a lot of money that you can take advantage of. So what I am encouraging people to do is I'm educating you about this program. If you make less than $67,000 of a household of two or less, or $77,000 with a household of three or more, then you may be eligible for this program. There are income limits. I mentioned there's a 640 credit score requirement. But at the end of the day, you got to be a first-time buyer. You can't have owned a home in the last 3 years. If you owned a home 6 years ago and you've been renting ever since, guess what? You're a first-time buyer. You've been staying with family for the last 3 years since you bought your last home. You're a first-time buyer. Anybody that hasn't owned a home in the last 3 years is a first-time buyer. You can potentially take advantage of the $15,000 option. I'm just going to quickly highlight a few more details, and then we'll move on to the next program. Number one, it's got to be a primary residence. Obviously, you got to live in it. And then the Home Advantage program has a $245,000 maximum sales price limit. You do have to be a U.S. citizen or a permanent resident in most cases. In rare cases, you could be a non-permanent resident, but for the most part, you have to fit, some of the residency guidelines. And then I mentioned the eligible products, single-family, townhome, condominium, and up to 1 to 4 units. So all of those work. Mentioned the program where the funds are forgiven over the first 5 years. You do have to take a little home buyer education class online. Only takes about 30 minutes to an hour to do that. But at the end of the day, what's most important is you call to get qualified. You go to my website to get qualified. You text me to get qualified. $15,000 could be yours to help you buy a home. And my number is 704-277-4463. That's 704-277-4463. So give me a shout. Say I need $15,000, Reshair. Get me the money, and I'll get back to you on that. So we'll circle back with you at the beginning of the week. So what I'd like to do is take a quick minute to highlight another specialty program that's offered through North Carolina Housing Finance Agency that not a lot of buyers know about. And what I like about it, I call it supersizing your mortgage loan. So if you're buying a home and you are a first-time buyer, it may be that you don't qualify for that $15,000 in down payment assistance for one reason or another. It may be that you just exceed the income limit for a particular area, whatever it might be. There is another program that North Carolina offers that doesn't have to go with a down payment assistance loan. In fact, you can just be buying your first home with 5% down. But what I'm going to tell you or teach you about is called the Mortgage Credit Certificate. And we call it an MCC. You talk to a mortgage professional, and we throw out these acronyms on it all the time, like LTV and CLTV and DTI and MCC. And of course, we expect you to catch on after the first time we explain what the acronym is about. But MCC is called a Mortgage Credit Certificate. And what I'd like to do is just sort of explain what it is. Basically, an MCC is a certificate that allows a home buyer to take a federal income tax credit for a portion of the annual interest that they will pay on that future mortgage, because you pay in principal and interest on that mortgage. The maximum is up to a $2,000 credit on their mortgage loan for a primary residence. Basically, by increasing the net take-home pay of the home buyer after the taxes, this credit may allow a home buyer to qualify more easily for a loan or qualify for a larger loan that would otherwise not have been possible. So essentially, if you pay $10,000 in interest into your mortgage the first year, the state will give you up to a 30% tax credit, but not to exceed $2,000. So of the $10,000 you paid in interest, you could get a tax credit for $2,000, because it can't exceed $2,000 in my example of $10,000 in interest. And essentially, that tax credit, what it does is it'll, through the state of North Carolina, when you file your tax returns, that interest that you paid in, you're getting a dollar for dollar credit back. And what buyers can do, they can do one of two things. Either they can change the withholdings with their employer, so instead of them getting a big tax return check at the end of the year for dollar tax credit that comes back to them, that they actually live on $2,000 divided by 12 is $166. They live on $166 more per month because they have less coming out of their paycheck. So they can go to their employer, change their withholdings. You have to contact your HR department, change your withholdings so that when you get that tax credit or when you sign up for that tax credit, essentially we can help you live on more of the income because we know that tax credit is in place at tax time. Obviously, you have to work with your CPA or tax service to ensure that you follow the right procedures to get the tax credit even after we close your loan. But that tax credit can mean additional income in your model each and every month to make your home more affordable, or really just gives you a larger tax return check at the end of the tax year when you file your taxes. What I will tell you is the tax credit is available each and every year that you stay in that home and you maintain it as your primary residence. You understand that if your first year, you're going to pay more interest into your mortgage than you will your 10th year because you've really built more equity in that mortgage and you're paying less interest as the life of the loan goes on. You're paying more and more principal in each and every year or each and every month. So you still get that tax credit each and every year, but that tax credit will get smaller as the years pass because you're paying less interest year over year. It's called, again, the Mortgage Credit Certificate. I'm here to educate you on this sort of add-on feature There still are income limits. It's not limited to any particular county in our area. There's no special credit score requirements, and that's really important there. You could get this MCC tax credit with as low as a 580 credit score, which is Movement Mortgage's minimum credit score on an FHA loan. Not all FHA loans will qualify if you have a 580, but if you happen to get approved with a score that low, you can still apply for this mortgage credit certificate, whereas the assistance programs that I mentioned earlier typically have a minimum credit score requirement. So that MCC is good for any product, and like I said, there's no minimum score to get it, which is really, really great. It does have to be your primary residence. You do have to be a first-time buyer. You can't have owned a home in the last 3 consecutive years, otherwise you will not qualify. Again, the property types, just like under the previous North Carolina program I mentioned, are eligible single families, townhomes, condos, duplexes, etc. All that works. Now, for this tax credit, you do have to take the homebuyer education course. It's typically done online. Takes 30, maybe 60 minutes to knock out. What I will mention to you is, in order to take advantage of the MCC tax credit, the state of North Carolina charges a $475 processing fee, and Movement Mortgage charges a nominal $300 processing fee for the same extra paperwork that has to be performed on your behalf to get the tax credit. However, the tax credit, again, is up to $2,000 per year, as long as there's enough interest to write that off. It will pay dividends year over year if you're eligible for the mortgage credit certificate program. So if you have any interest in that MCC, ask your local loan officer. Again, I'm here to educate Charlotte. I know that not every individual that's applying for a mortgage is going to use Team Reshatar Movement. That's cool. I get that. There are a lot of great lenders in town. Obviously, we're in the business to help people, help our listeners, so don't hesitate to reach out to me. But you can ask your local mortgage professional about an MCC. A lot of loan officers know about it. Not a lot of them do the program. So if you need that little extra expertise, you can give our team a shout. But what I'd like to do is just, at this point, we've highlighted the North Carolina Down Payment Assistance Program for $15,000. It's called the Home Advantage Program. I need our buyers, our listeners, to give us a shout. Also, for anyone that's interested in that mortgage credit certificate program, that's another great way for first-time buyers to really take advantage and leverage the resources through the state to help them pay less taxes at the end of the year, or really get a credit back on the interest they pay on their mortgage. So these are some really cool featured programs in our local marketplace. So what I'd like to do is take a quick minute as we sort of wrap up our show here today, and that is talk to people about a little bit about the process of qualifying and applying for these programs or others. So I'm a licensed loan officer with Movement Mortgage. I'm licensed actually in Virginia, North Carolina, South Carolina, Florida, and Pennsylvania. I cover lots of different states, but my stomping ground here is Charlotte, and that South Carolina area. I live about a mile from South Carolina. But really, most customers today are going to take advantage of modern technology. We have what we call an online application called the Easy App. Movement Mortgage has a phenomenal loan application software tool. You go to themortgagegenius.com. You can do it on your smartphone and apply online today over your lunch break. And it just walks you through, how much do you want to buy? Where do you work? You type in the name of your employer. How much do you make? It puts in your hourly wage, about how much, who do you bank with, etc. Not only does it give you an option to just enter the information, but it also will give you access to allow some of the vendors that our company works with, like TurboTax, like maybe a payroll service, or even your local bank, where we can export the information directly from those vendors right into our software application, so that when you finish your Easy App at themortgagegenius.com, not only does it give me the information of where you work and how much you make, but you can upload your photo IDs and we can port your bank statements right over and pull your pay stubs in from your employer. So there's some amazing resources, and the mortgage process has come a long way. The Easy App is an amazing process for our buyers to really take advantage of today. So if you're old school and you want to do an online application, that's cool. Or you're old school, you want to do a phone application, that's cool too. You can give me a quick shout at 704-277-4463. So great programs. Use the Easy App, apply online, themortgagegenius.com, or give me a shout. at 704-277-4463. That's 704-277-4463. It's been great. We hope you learned a lot today here on Reshair Radio. We'll be back next week for another great episode of Reshair. So keep on listening and have a great week.
You've been listening to Reshair with Chris Reshatar, a seasoned licensed mortgage consultant with Movement Mortgage, equal housing lender. Originator license number 117266. Learn more online at themortgagegenius.com.